Hello, everyone. Welcome to the WealthBridge, weekly recap that I'm about to do right now over the past few trades that I've taken this past week. Let me get it situated here. So we'll start on the monthly. So I only trade gold. I only trade gold relative to the US dollar. So it's a commodity. Even though it's paired against the US dollar, I mean, if you were to trade futures, it would be the same thing. If you're to trade off a Webull account or Robinhood account, you just be trading GLD. But I trade gold versus the US dollar. So we'll start off on the monthly. Let me actually let's do this the right way. Let me rewind and we'll go back a week so that you all can see what I was seeing here. All right, so let's go back on monthly. All righty. So on the monthly, all I like to do is just mark areas of support and resistance. So I'm gonna just change this to black so I don't get confused on the lower time frames. So we got a high and a low. So in the sense of like extreme highs, we got an extreme high here, but overall resistance that price is, abiding to is right around here or anywhere within this range. Um, that's really all I do on the monthly. So going down to the weekly, just identifying a little bit more in-depth price action. Some people might like to, set the resistance level here because it's more in line with this price point and these three price points. But I like to keep mine a little bit more simplistic where it doesn't overlap on too many tested candles. And overall general direction of the area, this is where the resistance is at. I got that. Deleted. Going down to the daily. So now this is where things get a little bit tricky. Let me try to do my best to explain this as well as possible. So price came up to the overall resistance, extreme resistance, tried to break above. Obviously, that failed. And price is holding below it. Price started out the year of 2024 just straight up consolidation, which is fine. It's just that we have to tailor the way that we trade to go from a trending market to be trading in a ranging market where the movement can be very limited and we're not going to get as many running profits. So we have to set that take profit in the system and leave it be versus just leave that take profit open, because a lot of times from my experience in January, I'll go and profit and then price comes back to me either at break even or for a full stop. So it just takes a little bit of adjustment. I mean, we're all still learning. You never stop learning, and it's just something I had to adjust to for this upcoming year. So on the daily, I started off by marking, well, first we'll do a fib. So most people are accustomed to using a Fibonacci tool. So we have a 786 here, retracement, so 78.6%. So prices was trading in a discount right here. The 50% is fair price. Anything below that is discount. Anything above that is premium. So you don't want to buy in the premium. You only want to buy in the discount and vice versa. You don't want to sell in the discount and you only want to sell in the premium. And then the 50% is what we call fair price. So in order to make this very simple, I take the Fibonacci off of it. Once I know where price has rejected off of which level, I just delete it and I replace it with equilibrium, which is just a simpler version of Fibonacci, I would say. So where it only incorporates the 50%. Let me be precise about this because I like my stuff being exactly on the wick. We'll do EQ. So for equilibrium, so price is trading right around fair price, um, where the asset should be valued at in its current range. This makes it a little bit difficult to make decisions, but overall, we did have a good week this past week. Only took one trade, which is fine. Made good money on it. We'll get into that later though. So let me go down to the 4 hour. So prices right now, what we would call in the discount. Nothing too crazy going on in the sense of there haven't been any crazy breakouts out of these highs or these lows. That's when I would start to, be looking for trending moves, possibly swinging some moves. But right now we're trading within a range. right around the fair price. So around the 50% of the range. 4 hour, I'll just look at structure to see if there's anything I can identify. A few weeks ago, I was looking at prices here, which looked nice. And then all this mess happened. A lot of chop took place, which is fine. Like I said, we just got to adjust. So this upcoming or last week, I was just mainly looking at where was price going to break out to out of this mini range, possibly respect some fair value gap or imbalances that we could, trade to the upside or the downside, just to see what made sense for the upcoming week, because price is very much in a state of indecision right now. It's not deep into the discount and it's not in the premium at all. So it's right in that range of, okay, I don't know what it wants. Nobody knows what it wants to do. We just have to wait to see what happens and then build our analysis off of that. So going down to the 1 hour, 1 hour is honestly my favorite time frame to trade. I made a lot of my profits last year off of solely focusing on the 1 hour. Long term, that's not as sustainable, but it's a good way to start. Just building like different systems and models to enter the market off of. So on the 1 hour, I start seeing a few more. Let me go back to the 4. But I think that will help you guys a bit more. So the 1 hour and the 4 hour, seeing price trend a bit to the upside. Whereas at the open of this week, last week, price wanted to just have a tested candle break out of it. I wasn't too worried about this. I needed to see price break below. And even if price broke this low here, the overall sentiment of the market would still be bullish within this range until price broke this support here, which has not happened yet. So if price breaks this, I'm not really too worried about sell-off. I'll just be waiting to see what price does to react off of here, because this is the support where price changed direction to move to the upside, didn't break highs, but then continue to the downside right after. So yeah, that's on the 4 hour. Same thing on the 1 hour. It's just a little bit clearer on the 4 hour for you to see the trend line. This is tested here. And this is where the change of structure happens. So we have, support high on the lower time frames, higher low, which just broke out into a high, came and took out this liquidity, and then we moved to the downside. But that's all that will happen 2 weeks ago. We're looking at what happened this past week. Then we'll go back into my Notion to see what I actually did, and I'll be showing you guys on the chart as well. So on the 1 hour, I see here that price has somewhat of an imbalance, where the wick of this candle doesn't meet the wick of the candle in between, or the candle on the other side of the candle in between both. I know that's very hard to explain, but I'll go down to the 30-minute. I go on the 30-minute sometimes to look for a better fair value gap, just because sometimes the hourly can be so simplistic that you might miss a little bit more of the intricacies and details that are provided on the lower time frames. Not to say that you stay on the lower time frames, you always start on the higher ones, but sometimes the lower ones can be pretty beneficial to look at as well. So starting off the week, I was looking at this fair value gap here where price had rejected off of twice. Let me change to a black one. So we have a break of structure. So we have support, resistance, back down to support, break of structure to the upside where we started trending upwards. And it's always good to look for fair value gaps right before a break of structure, and order blocks as well. So the order block would have been this last candle here. So this would have been a demand zone, what people call, which was also tapped into here, barely. But order blocks, fair value gaps right before a break of structure are key areas where order flow took place. Major market movers entered the market. So that's one thing that I look for. So just identifying that fair value gap on the 30-minute helped me out a lot for framing what I was looking for the upcoming week, because most people would just identify this as a support, not look at the narrative behind it, what had happened, a whole week prior to this previous week. So just showing you there's a lot more strength to the narrative that you have to build. So starting off, I was mainly just looking at how price was squeezing a bit not so much to the point where it was unbearable because price was testing it a lot. So we don't even have to worry about that. We didn't have to worry about that at all. So let me just let this play a little bit. And then we'll get into the trade setup that I did take. So one trade setup that I was supposed to take, that I was just a bit wary of on Monday, was just the way that it's set up. I usually like to see price stay above the equilibrium or fair price, or reject it above fair price or below, depending on what I'm doing, buying or selling, just to give myself extra confirmation that happened here, that also happened here, that didn't happen here. And then we also have some liquidity, which just simply means price gave an area where people could put their stop loss orders. So there are a lot of people selling here, 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 and here, and they're putting their stop loss orders above their entries. So a lot of liquidity is here, a lot of cash and available cash is held up right around this area, for big market movers to be able to move the money in the direction that they want to. That's not to say they're making money off of the markets. They're simply just trying to move money from point A to point B, and they need cash and liquidity in order to do that. That's what happens when people usually talk about like stop loss hunting. They're hunting my stops. Institutions are hunting my stops, like they're stopping me out. It's literally just all they're trying to do is move their money, and they need liquidity in order to do that. Otherwise, the price will get slipped and they'll lose money taking the position in order to try to move money. And they don't want to do that. If they want to transfer $1 billion, they want $1 billion to be transferred. They don't want 900 million or 950 million to be transferred and lose a 50 million, take a $50 million loss. Simply because their price or their order got slipped because there wasn't enough cash at hand at the time that they wanted to make that transaction. So that's just a little bit of insight as to like the idea of liquidity, because not many, it wasn't until a few months ago where I started really, you know, paying attention to it. And it does make sense when you look at how the market moves. The market literally just moves to take out liquidity, and just to move money makers cash from point A to B. So back into what we're looking at here. What I should have done, we'll go back. Let me go down to the 15 minutes, and we'll go back to this candle here. So this all took place Monday, and I do my best to be up by 5 a.m. each day. Not saying I'm taking a position at 5 a.m., but I'm on the market. I'm checking the charts, doing my due diligence to possibly get in a position for the day, anywhere between 6 and 7 a.m., and then be looking to actually take a position by 8 a.m. or 8:30, and so on up until around 12. So looking here, price comes into our fair value gap from a week prior to this past week. Once I see that price is rejecting, especially on the 30-minute, because on the 30-minute is where the fair value gap was created. I liked what I saw, but I didn't like it enough to take it. All I was looking for here was a break above structure on the lower time frames, followed by an imbalance or fair value gap. Now, the only difference between an imbalance and a fair value gap is that a fair value gap has 3 candles of the same direction. An imbalance only has 2. Whereas, let me show you. You'll see both in this example. You should see both in this example. So price breaks above this structure here. So I'm looking at it like this: price breaks, minor resistance, changing sentiment. So we're in so far as of right now, a bullish market, right? So we can just put 5-minute to keep track, right? So 5-minute break of structure. I'm looking for a fair value gap to enter off of, or an imbalance. This still happened to be a fair value gap. 1 bullish candle, 2 bullish candle, and 3 bullish candle right here. Whereas the imbalance might be, this would be the bearish candle out of the 3. But there would still be a discrepancy of where price is intrinsically valued and where it's actually valued at. And that's where this gap comes from this wick to this wick. So what we would do is simply draw, identify the fair value gap, and then we'll be looking for any type of simple price action to be entering off of, and then target the liquidity on the highs. So let me do red, high importance. So once I see this, I was ready to enter the market upon seeing a bullish engulfing off of a bear. So this was nice. Mind you, it's 650. There's not a lot of volume in the market. The market hasn't opened yet for the week. In the sense of New York Stock Exchange, there wasn't a lot of volume, and a lot of volatility. So price had already tapped this. It didn't make that move. It didn't give me any reason to get in yet, so I didn't. So when this took place here, these two candles right here, I'm thinking we're gonna get a bullish engulfing, and I'm gonna target these highs all the way up here, right? So somewhat of a 1 to 5 risk reward, anywhere between a 1 to 4, 1 to 5 risk reward. And when price broke through, I'm sitting there kind of confused. I mean, I wasn't confused. It was just an unfortunate situation. I'm thinking, oh, I'm just not going to get in a trade today, which is fine. But it was a good setup. It was a solid setup that I wanted to happen. But I wasn't paying attention to the order block right under the fair value gap. That's something that this week taught me to pay attention to more. Where we have the order block right here, the last bearish candle before the bullish impulse. And you'll see right after, price shoots up, gives us that perfect. I mean, let me rewind it again. This was, when I tell you, I was in my chemistry class thinking about this. After seeing it happen, I was beating myself up because I'm thinking I'm not going to get in a trade, but I was just ignorant to the order block right under, taking this position. Anywhere between a 10 to 11 pip stop loss. And then we just got to take profit at the highs. Because like I said, we're not in a trending market. We're in a ranging market. So it's only fair to say that price will take liquidity at the different highs and lows, at the various highs and lows that we're at. We're not going to get a move, or we're most likely not going to get a move where we just get a full-on breakout, because price overall on the higher time frames is ranging. So this is all that took place. It happened quickly too, just due to the amount of volatility or amount of volume that was injected into the market right around 8 o'clock. This happened at exactly at 7:45, the entry, and then this is 8 o'clock right here, and we shoot up from there. Just the amount of bullish momentum that happened in the market was amazing. But it is what it is. I chalked it up to just me not being cognizant of what was going on, and that's something I told myself I needed to work on and be more aware of. That the order blocks right under the fair value gaps are still valid entry points, and I need to pay attention to those. Now, obviously, the fair value gap is more favored, in the sense of you want to get that entry off of the fair value gap. But if not, and if there's an order block under it, still pay attention, because that order block might give you an entry signal as to where the market may go. So that's the trade that I should have taken this week. On the accounts that I have right now, so this would have been $100 risk for around a $603 profit. And that's great. I mean, a 1 to 6 risk reward, so 600% on the money that you risked. I think anybody would take that deal. So and it's a high probability setup. I've been testing it over the past few weeks to few months, as well as studying it from other people that have used it that are already successful, older than me, things like that. So that's the trade that I should have taken. We'll color code this one differently. We'll do pink for this one. This is the one I should have taken, right? So we'll keep going. Let's go back to the hourly. So price does that. Price on the higher time frames wicks it, takes the liquidity, keeps moving to the downside. That's the importance of staying aware of what's going on in the higher time frames, because it looks like there's a lot of bullish momentum, but it's really just liquidity. Market makers literally just wanted cash available on hand to be able to move to the next price level that they wanted to move to. So let's keep going. Let me go to the 4 hour so y'all can see. So I consider this a tested candle. Yes, price broke below, but the following candle was not another bearish candle. The following candle was a bullish candle that came right back within the range. So I'm not looking at any sells. Mind you, I'm not looking at any sell positions because on the higher time frame, if you go to the 4 hour, price hasn't even closed below it. It actually gives you a bullish engulfing, signaling possible buy positions to take this liquidity again. So we got that trade done. Now there's more liquidity at this high here, this extreme high within the internal range. Going down to the 1 hour. All I'm looking at is this fair value gap. This is what I was looking at. I already missed one opportunity. I'm not going to miss another. So fair value gap here. Do this one black as well. I like it being real precise. So then I like to magnet it. There we go. So all I'm looking for, since this happened on the 1 hour time frame, I'm waiting for price to come back into the range, into the fair value gap on the 1 hour time frame and reject off of the 1 hour time frame. I don't just wait for price to come and touch it on the 1 hour time frame while the candle's still live, because price can blow through it. If price blows through it, then we got no trade, right? But if price does reject, it has to be on the 1 hour time frame before I go to look on the lower 15 and 5 minute time frames for a possible entry. So it wasn't until price did this here where I was ready to look at getting entered into the market. So we'll delete this one. All righty. Going down to the 15. On the 15, this is nice. I don't usually don't, like I told you, I like to enter off of lower time frames that have a bit better confirmation. This isn't going to happen every single time when we have this bullish engulfing. This is very clean price action. I wasn't paying too much attention to it though, because price can still blow through. I like to look for a fair value gap or imbalance on the lower time frame as well, signaling that we're switching direction to the upside now on the lower time frames, which will correlate to the higher time frames, the higher time frame narrative. Going on to the 5. This is where I was really spending a lot of most of my time. What was this, Tuesday? Oh no, this was Monday night. Remember, yeah, Monday night when I was looking to get in this position. I was looking to let it run through London, and that's exactly what happened. So we got a fair value gap here. Price, if we were to go down to the, we're not going down to the 1 minute time frame. That's chaos. Price, lower high, higher low, higher high. Just because of this bearish candle here. So price is changing direction, right? It's changing sentiment, which is what we look for on the lower time frames, just to give us a bit more of a signal as to, oh yeah, now we should look to enter the market. All right, so got it red. Let it play. So this was my entry here. I'll show y'all in my Notion in a second. Oh, what am I doing? This is my entry here. I've been testing a trade copier. I was testing a trade copier last week, so I got entered on both of my funded accounts. Beautiful entries. And then all we're doing is targeting the highs where the most liquidity is. So like take profit one to be somewhere right around here. Then full take profit is here. Now, if this setup took place during New York session, my stops, I'm having a 15 pip stop for around 1 to 5 risk reward. But since it was Monday night and we still had to get through London session, I just, to be safe, moved my stops right under the hourly fair value gap. So for a 30 pip stop, just to give myself some breathing room, because I was going to be asleep while this trade ran. So, you know, if we win, we make money in our sleep. If we lose, we lose money in our sleep. So I just wanted to give myself some breathing room, and I also set an alarm, which is something that you can do on TradingView, where if price breached this, like right around this area, I would have been alerted. I would have been woken up and notified by it so that I could make the proper decision to either exit or see that if it's only wicking out. But you'll see in a second. Let me go to the 15 minutes so y'all can see. So that's my entry. off that fair value gap. That's what I was looking for to happen here, but that's not what happened. Um, One thing I also like, I mean, like I said, for the previous day was or earlier that morning, this zone here is high interest as well. So honestly, I should have just set my stop loss under here. Could have increased my risk, but it is what it is. I still had a great day, or a great night. So going to the 15-minute time frame, let it run. Price takes liquidity again. Full TP throughout the night. The trade ran for around 6 hours. Beautiful. And this was actually a day of CPI. So I told myself, if I wake up, because I'll, wake up at, 5 to 6 a.m. If price hasn't hit TP by 7:30 or 8 on the dot, I'm closing the position because I don't want to keep my trade open through news. A lot of volatility. Um, and I like to stick to my rules in that regard. So price hit full TP for right around 84 pips, close to 85 pips. It was a nice move. That's what I did take this week. Let me go show you guys in my Notion if that will show up. There we go. So this was the trade that I should have taken on Monday. Um, so my cash entries, just no trades. But then this is what I could have done better. So that first trade I could have made around, $513, only risking 100. But this is just, my thoughts about it, some screenshots as to what, happened in the moment. Basically everything I showed you guys, me looking for that liquidity to take profit at. That's what took place. I have this. This is for the trade that I did take. Amazing trade. Honestly, one of my best trades, I would say. And I did get to take it on both of my accounts because they are connected now. So on my influencer account, I enter the trade in it, and then it copies on my follower account almost instantaneously. It's about like 10 to 20 milliseconds of lag, which is totally fine because that's maybe a pip, not even, maybe like half a pip um, discrepancy. So it's fine. Um, so around to close to a 1 to 3 risk reward. I really don't care once price hits above a 1 to 2.5. I like 1 to 3s. Over the past 6 months, I've averaged a 1 to 5 risk reward. So this is on the lower side. But as you can see, like on my funded, um, made over $800 on each account. And I get 80% of those profits. So that's real nice. I got a link to the screenshot, but then I also got um, just these notes here as to the actual trade. Rest of the week was cash. There was too much economic news going on. I sat on my hands for the rest of the week. Let me go to Safari. So that's what took place on gold this past week for me. Missed one trade, going to be getting into this upcoming week, trying my best to not miss any setups that I know I should be taking. And that was one thing. If I'm not on the charts or I'm not able to be on the charts, and that's fine. But it's another thing if I'm on the charts and I'm too nervous or I'm too scared to get in. This week could have been, I could have blown this week out the water. And I still performed good in my eyes. But there's a lot to improve on, and we're getting there. So yeah, I can just let this play out rest of the week. It was pretty calm. As you can, I'm not calm. There was CPI news that went crazy. All this here was just a bunch of choppiness. Price wanted to retrace, but sellers were still trying to push it down. So it took a little bit of time for price to start that retracement. Now we're not really looking at too much for this upcoming week. Only thing is just this imbalance from here to here. Looking to measure, I measured that, and we're looking to get into a continuation to sell to the downside, most likely this upcoming week. We'll see what happens though. Prices right now retesting the previous lows, so that's kind of nice to see. But we'll keep you guys updated in the Discord. If you're watching on YouTube, I'll put a link to the Discord down below. I hope everybody has a great rest of your weekend. We'll attack this week with a lot more discipline. Um, and execute on the plans that we have made for ourselves. So I'll catch you guys later. Let me see how I can stop this. Can I stop this recording?